Good afternoon. This is Brian Splitt with Allendale here with your closing commentary on June 4th, which is a Friday, 2010. And we did have bearish trade today across the board. Summarizing the grains first and foremost, we did have corn. Old crops settled 9.5 lower in July. That settlement price was $3.40. That is down 19 cents on the week. The new crop December corn was down 10 3/4 today. Settlement was $3.59.5. That is down 20.5 cents on the week. The July soybeans were down 20 cents today, taking back most of the gains from yesterday. Settlement there was $9.35. That is only down 2 3/4 for the week. While the new crop November beans settled 19 3/4 cents lower today at $9 even. That is down 7 3/4 cents for the week. For the wheat, July Chicago was down 6 cents today at $4.35 3/4. That is down 22 cents for the week. December wheat also down 22 for the week, down 7 1/4 cents today at $4.83.5. On corn, really we had the spot month fall to the lowest price in 8 months. We had some disappointing export numbers today. The expectations were 700,000 to 1.25 million metric tons exported last week. The actual number came in at 313,000 tons. China did not buy any, so that was seen as bearish. We also are dealing with ideal weather across the Midwest right now, or near ideal, so there's really no weather scare at this point to make the market go higher. It was estimated today that the fund sold 8,000 contracts of corn. On soybeans, we saw profit taking after yesterday's sharp rally. We were exacerbated by, obviously, the moves in some of the other outside markets with some spillover selling. There was some market talk today that China is considering either delaying or canceling some soybean purchases from South America. And we also had funds selling estimated 4,000 contracts of soybeans today. In the wheat market, again, with corn going down, wheat's making new contract lows day after day. Again, same story today, new contract lows for both the Chicago and the Kansas City markets. Same story, plentiful global and domestic supplies. It was estimated that a fund sold approximately 2,000 contracts today. At this point, some of the key targets we're going to want to watch for in the July corn, we're going to look for the contract lows of 333 3/4 as our next major target. 351.5 will be a key area. If we can close back above that, we may see some money re-enter the market from the buy side. On soybeans, really 920 and 930 are pretty key areas for the old crop. 950 being near-term resistance to 958, which was the overnight high. On the new crop soybeans, 893 is the current low for the move, and we're going to have resistance built in right around 912 up to 922. On the wheat market, again, the continuous chart would suggest that our next major area of support for July Chicago wheat would be down at the 4 1/4 area. Previous contract lows before this week of 460.5 are going to be your resistance to sell against. Moving over to the livestock market, we did have selling there as well. The hog contracts finished $1.40 to $2.15 lower. The August contract was the weakest month, with June down $1.40. Really the news today, Russia gave 25% of our poultry import quota to other countries, so that added to the bearishness today for the hogs. Over to the cattle. Really, you can blame a lot of this move today on the stock market. The fat cattle were down $1.15 to $1.50 today. June was down $1.15. We did have the feeders also lowered 60 cents to 90 cents. Beef was down this week, even though we had cash hit 95, which was up for the week, but we are going to look for some lower cash next week based on the moves that we're seeing in futures and just the general tone to the overall economy at this point. So that's the main story of the day. We've covered what's happened in the grains and the livestock, but it was really driven by more outside market activity. And late in the session, we do have the dollar index up at its high. It's up approximately 107 points at 88.28. These are new contract highs for the June dollar index. Really driven by a weak euro. When you're talking forex markets, you're going to see a high level of spreading between the U.S. dollar and the euro. If you look at a continuous chart of those markets, they pretty much mirror each other. And at this point, with the euro going down, making new lows, that's based off of a couple things here. We had concerns. Official in Hungary expressed concern that we could be seeing the European debt crisis spread to that country, and if we see more contagion here with more of these European countries continue to look like they're going to need bailouts, this is not a good situation to be in. So the idea of a whole global economic recovery is definitely getting stifled at this point. We also had domestically some non-farm payroll numbers come out, and for the month of May it did show that we added 431,000 jobs. That was below trade expectations of 513,000 jobs, but of that 431,000, 411,000 are temporary census jobs. So we're really not adding to our workforce at this point, and at this point it looks like this economic recovery is going without the assistance of the unemployment situation being bettered. So hard to get very friendly on equities at this point. Crude oil settled down $3.10 today with July trading. Settlement of 71.51. Allendale did put out the recommendation to sell crude oil yesterday, so we are short at 74.60, and looking for a retest of recent lows. There is a possibility we can break into some new lows, and there are some larger targets below us that we do feel are still very viable. One of the only markets that was higher today was gold. Did have gold finish over $7 higher at settlement, really based on safe haven investment. You know, there's only a few places when you have a lot of calamity like this in the global marketplace that investors are going to want to put money. Right now that seems to be the dollar index, the yen, and gold. And if we're going to continue to see the equity markets plunge, we're going to see crude oil continue to plunge, and we're going to see money leave those markets and go into those other safe haven investments. So that's the story. Looks like going into the close, we do have equities near their lows. Last on the cash Dow, just waiting for the update, down 317 points. So not looking like we're going for a strong close, obviously, in the last hour of trade. But that's your summary. Hope you had a good week trading. And if you need anything from us, call us at the office, 1-800-2MARKET. That's 1-800-262-7538. Or look us up online at www.allendale-inc.com. And again, this is Brian Splitt with Allendale, and good luck trading you next week. Thank you.